welcome to The Power Is Now TV. My name is Eric Frazier. April is Fair Housing Month, and last year, The Power Is Now began a series to talk about the 1968 Fair Housing Act, its importance to our community, and what we can do to really promote fair housing among real estate professionals and the community at large. Well, it was a hit, and this is our second season of this show, of this series, and we're going to continue it indefinitely, folks. Every year, we're going to be inviting industry leaders to come on our show to talk about the 1968 Fair Housing Act and what it means. Now, on April 11th, 1968, the president, Lyndon Johnson, signed this into law, and it came after a great deal of social trauma. I mean, the death of Martin Luther King and cities burning down. And it really speaks to the challenge that we all face with embracing change. And here we are, 54 years later. Has the 1968 Fair Housing Act done its job? Do we see any real change in the rate of homeownership for minorities and people of color? So these are the questions we're going to explore today. And with me is Gabe Del Rio. He's the president and CEO of the Homeownership Council of America. And he's with us today. Thank you so much, Gabe, for joining The Power Is Now.
Thank you, Eric. I'm pleased to be here with you.
Gabe, the pleasure is all mine. And you have been a leader in housing for many years. You're doing big things. And I can't wait to really get into the details of all that you do to really support fair housing as an organization. Now, before we get into that, we have a question we ask all of our guests. It's a tradition here on The Power Is Now, and that is, what does the phrase, "the power is now," mean to you in the context of who you are, what you do professionally, as well as fair housing?
Well, to me and to our mission, I'm incredibly passionate about getting people into home ownership and the wealth building opportunity, the intergenerational wealth that home ownership builds, and the difference it makes in folks' lives. So to me, the power is now is really all about grabbing that power, really harnessing your power as an individual, as a household, as a family, to attain home ownership and find your way in. Every day that goes by is a day when prices are increasing. And so every day it's either further out of reach or you're missing the opportunity to build that wealth. So grab your power, understand your power as a consumer, get every program you possibly can to help you get over the line, and do it now, because the time is really urgent. And like I say, every day we're missing out on that opportunity for folks.
Gabe, that was a great Power Is Now statement. I agree with you completely. Markets don't wait. Interest rates don't wait. The power is now. It was a year ago that I was offering interest rates in the low 3% range. And now for down payment assistance even, it's in the mid sixes. And so many people are being priced out of being able to buy a home. And it's really challenging. So folks, heed Gabe's advice. The power is now to buy. Now, Gabe, you're all about helping people actually buy with down payment assistance programs and just being on the front line of financial literacy. So if you could tell our audience about the organization, Homeownership of America, Homeownership Council of America, your mission and vision and for the organization.
Right. So HCA, as we call it, to be less of a mouthful, for Homeownership Council of America, our mission is to bring increased equity and access to home ownership for America's underserved communities. And what we do to serve our mission is primarily through two channels. One is our main core program, which is called Community Lending Initiatives and Mortgage Banking, or CLIMB, and we like to say CLIMB with HCA. And we work with CDFIs, or Community Development Financial Institutions, around the country. Many of these are nonprofit lenders. We also work with groups like Fannie Mae and mortgage lenders and home builders to create programs, products, and delivery systems, as we call them, or partnerships that reach into underserved communities and increase access to credit and increase production among that population. So that's our main focus in Climb. The other new program actually of ours is our Equity DPA program. So we've been helping folks to create special purpose credit products and programs, and I think we'll talk a little bit more about that today. But we created a SPCP, and a special purpose credit program, down payment and closing cost assistance product that we've just launched the campaign with, thanks to Realtor.com. And we're hoping to take that national as a shared down payment and closing cost assistance that's focused on communities of color and doesn't have the same income restrictions that most down payment assistance does, because communities of color need to have access to these programs at higher income levels.
Gabe, that's really exciting. And we do need programs that really, how do you say, start with where they are. We know historically incomes are less for minorities than whites. Credit scores are typically lower than that of whites. And so although these programs are intended to provide assistance, they don't go far enough, do they?
No, and so we've seen most government programs or government funded programs, even bank CRA products, which are limited to LMI or low moderate income, really hits you at the 80% of median income level or less. So the vast majority of DPA programs are limited to that income level or less. And when we look at communities of color and low income communities as it relates to homeownership, there's an overlap in that Venn diagram, but it's not a very large overlap. And in fact, much of the homeownership ready population that still doesn't have, as you said, the savings accumulated to pay for the down payment and closing costs need that help, but are earning good money, have the ability to repay, and are otherwise mortgage ready.
No, you're absolutely right. The number one barrier to homeownership still is money, down payment. And that's the other thing too, that, with higher incomes, which is required to live in LA, Orange County, San Diego, all these high cost areas, you have to make at least good money to be able to live there. But in making money to live, there's no extra money to save.
That's right. That's right. And we see rents going up, up, up. Folks are paying very high amount for that with no guarantee that that won't continue to go up. And frankly, if you look at the housing unit shortage we have nationally, you would predict that it will continue to go up. And that's why it's so critical to, if you can, get into homeownership. Don't let the down payment barrier, stop you. And certainly, for most folks that we've seen over decades in this work, is the myth that you have to have 20% down. And the truth is today you can get a conventional mortgage, not just an FHA loan, a conventional loan that's less expensive with cancelable mortgage insurance. So it's our preferred program as a first mortgage, and a fixed rate for a first-time home buyer with only 3% down. And that's so right. That's why we made Equity DPA 3%. So if we have 3% down, a borrower has maybe 2% for closing costs, and you can finance the 97%. We can convert that renter into homeowner with a fixed payment.
You're absolutely right. Gabe, I consider you an advocate of homeownership. Can you tell us why and how you got into this? Because I know that you at one point were an originator in Lyndon.
Yes. I actually started as a home builder. I was into green home building in the late 90s before it was cool. And we always wanted to be in a place like today where you see green technologies being incorporated by the major home builders. That's where I first started my career in home and out of college. From there, I got recruited to work at a large lender, was a loan officer, learned the subprime market and saw what was happening in that market. Went on to be a branch manager of a mortgage bank in Irvine, and did that. Found a lot of craziness, I would say, when I got there. I pulled some strings that unwound some big movements, and this was all building up to the crisis, the foreclosure crisis. So I got to see all of that firsthand. And while working there, I saw a little ad that said nonprofit lending in San Diego. And so I thought, what on earth is nonprofit lending? I investigated, applied, and fell in love, and that was back in 2003. And I've been working on the mission side of lending ever since, running CDFIs and housing organizations. And I also became an accredited mortgage professional with the MBA, which we're very active with the Mortgage Bankers Association.
For those of you who are just joining us, we're talking to Gabe Del Rio. He's the president and CEO of the Homeownership Council of America. And Gabe is here to talk about the 1968 Fair Housing Act. And we've just learned about the organization that he's involved in. And really, you can just hear in his voice and see his passion for what he's doing. And that is to make homeownership a reality for everyone. We're going to take a quick break, and when we come back, we're going to get into the 1968 Fair Housing Act. You're listening to The Power Is Now.
Want to keep up with the current developments happening in the world of real estate? The Real Estate Roundtable, hosted by Eric L. Frazier, is a show you do not want to miss. The show features a panel of VIP agents who are passionate about helping people. It is what they do best. They discuss today's hot topics, latest market updates and trends. The panel also conducts interviews with prominent figures in the industry. New episode every Friday live on Facebook and replay on the Power Is Now YouTube channel.
And we're back. For those of you just joining us, welcome to The Power Is Now. Today, we're talking to Gabe Del Rio. He's the president and CEO of the Homeownership Council of America. This is our second season and talking about the 1968 Fair Housing Act, and we're inviting industry leaders across the country to join us in the conversation. And so far, we're off to a great start with Gabe Del Rio. Thank you again, Gabe, for joining us and being a part of this series. Now, April is Fair Housing Month, and believe it or not, Gabe, there are those who believe we still don't need a Fair Housing Act. It came into existence after great, trauma in society, from cities burning down, the death of Martin Luther King, and a host of other problems that ensued just getting the act passed. And here we are 54 years later, and there are still many who believe we don't need fair housing. What are your thoughts on that?
Well, sadly, we are in a place with statistics that says we are where we started. So we did see an increase in homeownership rate over some years, but that has gone back down now. And so we're at the same homeownership rate for Black Americans as we were when the Fair Housing Act was initiated and enacted. And so, do you ask, do we need it? I would say that I have absolutely witnessed. I can walk up in neighborhoods in certain cities and show you where racial bias absolutely has made a difference in housing, in pricing, in access, in ownership, in equity, in wealth, absolutely, you name it. And that says to me, we absolutely still need laws that will have some level of enforcement when we find that people have violated it.
What is your organization doing to promote fair housing, to ensure or enhance fair housing? Any initiatives or anything you're doing as an organization?
Absolutely. So our biggest initiative this year, or actually multiple initiatives that involve special purpose credit programs. And so this is a portion of the Equal Credit Opportunity Act that was created when they put ECOA together, because there was an understanding that we could have equal credit. However, there may be disparately impacted populations that still need some level of assistance or targeted instruments. And so special purpose credit programs are credit programs that are designed to be eligible or available only to a protected class. This can be done by geography or people. So there are some lending institutions that are choosing majority minority census tracts as a geography to deploy SBCPs. And there are institutions and many nonprofits who are putting loan programs directly into BIPOC consumers, which would include Black, Indigenous, all people of colors. It really depends on the organization, the community that they're in, the city, the MSA, and what the needs are of the population. So SPCPs are a big focus of this year. One thing we're, in addition to talking about this with the industry, doing a lot of that with the Mortgage Bankers Association, we've also partnered with National Fair Housing Alliance, and HCA, NAFA, and MBA are putting together the SPCP Toolkit for mortgage lenders. And that will be released this summer in June in Homeownership Month. And that is really a toolkit designed to enable lenders to create products that will specifically engage and be designed for communities of color and underserved, economically disadvantaged populations. And so wherever you can prove that that exists with data, you can design a product that is designated specifically to assist that population. So you could see that this is a really important mechanism. It's been around for 45 plus years now, and it's not been used. And in fact, the Fair Housing Act is one of the main laws that was thought of as a potential obstacle to SPCPs, because ECOA is different from FHA. And so the Fair Housing Act is by HUD, which is still governed by HUD post Dodd-Frank, and ECOA is governed by CFPB. CFPB had given clear advisory opinion on special purpose credit programs, yet HUD had not until the end of last year. And when they did in December of 2021, everyone in the industry was therefore clarified that there was no contradiction of these laws and that it would not be a violation of Fair Housing Act to specifically advantage a disadvantaged group through an SPCP.
Gabe, I'm wondering though, is this more political, and that because of the lack of collaboration and a desire to make the Fair Housing Act actually a reality, that it's more political? They didn't see the connection between the ECOA and the Fair Housing Act. I mean, I don't see how there was a disconnect in the first place. And here we are, 54 years later, and a year ago, this is just being clarified.
Right.
I'm wondering that it's got to be deeper than that.
Sure. Why didn't CFPB, which didn't exist, before Dodd-Frank, but why didn't they clarify that sooner? And why didn't they call for clarification from HUD sooner? I think that's a perfect call, and makes perfect sense to me. We should have done these things 45 years ago, in my opinion. But what happened with George Floyd, and when changed this country? And while I've been talking about SPCPs for many years, I never had anyone really listen until that event. And so now people are listening. They've leaned in. They're looking at not just the homeownership gap, but the wealth gap. And when you look at that, you'll find that the largest driver is homeownership. And you start saying, well, what can we do to further Black homeownership, for one, but for other underserved communities as well, because that's going to make the difference in the wealth gap. And people are finally paying attention. So, politically, yes, I agree. The winds have not been prevailing in that way. George and many others gave their life for that to change. And so, from my perspective, I'm tired of working in this industry and working on a mission without seeing these things done. So that's why we made one, and we help others make them.
Gabe, there is a stat out there, and I'm sure you're familiar with it, but when, I believe in 1940s, when FHA started making low down payment loans, and prior to that, you had to get a short-term loan, and only the rich could really afford to buy. And so from the beginning of FHA to about the late 60s, less than 2% of all FHA and government loans, including VA loans, were made to African Americans. And Yet you're saying during this time, the provisions were there to address, the need of housing for African Americans. And we also know that while the wealth of non-African Americans, non-whites, while their wealth diminished even more because increasing rents being, forced to rent during all this period of time, whites' wealth grew significantly. And this is one of the primary reasons why, through homeownership and lack of access to capital, there is a tremendous wealth gap. I was looking at a study that showed that by 2030, the gap will be close to $1 million between whites, blacks, and Latinos.
Right. Yeah, I mean, there are folks who say, well, what about the people who had their down payment, right? Well, those folks benefited from a biased system that availed them to that opportunity, that opportunity then drove wealth. That wealth has been passed down intergenerationally. And that is why we specifically focus on and work to build special purpose credit programs, down payment assistance that gifts funds. Our equity DPA program gifts the funds to the home buyer, and that it's focused on people of color. And it is for that purpose. It's to change the equitable standing of people who have been subject to a biased society. And so, we've got to do things about that, and it means dollars, and it means conveying dollars to folks to get that opportunity so that they can then lift themselves up just as others did when they had the opportunity before them.
Gabe, is there a possibility that through litigation, that this whole movement with special purpose funds geared towards that are race-based could be shut down even by the Supreme Court, like affirmative action, which is supposed to address the lack of educational opportunities for African Americans?
I think that's a great question for NAFA, and that we certainly lean on NAFA and MBA's counsel. We're engaging a lot of legal counsel in the SPCP Toolkit project for mortgage bankers. What I have seen so far is that there's a particular individual who's going around suing folks around these programs. However, it's on a constitutional standing, and that constitutional standing relates to federal dollars. So we are actually seeing the majority of activity and interest in SPCPs not through federal dollars. These are all private programs. This would be mortgage banks, depository banks, nonprofits, major corporations like Realtor.com, our first major donor. Those folks putting in and saying, we want to make a difference. We can do whatever we want with our private money, and we can give it to who we want. And in America, you can give someone $13,000 tax-free as an individual. And people can do what they like with their money. You can try and sue, but you won't win telling someone what they can do with their money. And so that's, we're really focused on that. And I'm not hanging my hat on federal funded programs
Right.
to do this. Now, to pick up on what you said earlier about FHA, should FHA be doing something? Yes, I believe so. We all know about FHA redlining, and it has had intergenerational and multi-decade effects on people. And so should something greater be done from FHA and HUD and Ginnie Mae? Yes, I believe so. We have our best shot with Elena McCargo as the president of Ginnie Mae now. She's a colleague of ours. We worked with her. She's a Black woman. She's very intelligent and very well versed in the data and where we are today and why. So I have hope that she will help to lead some policies that would counter the policies that FHA had in the past.
Well, we do need something that is tangible, that's real. The apologies, whether it be from Congress or are just not enough. The acknowledgement of wrongdoing is just not enough when there's real money that's at stake here. I mean, real wealth that was never realized because of open and notorious discrimination. I mean, redlining and devaluing properties. So I think there is a responsibility, and I'm really looking at the Black Caucus and other notable, influential members of Congress to take the lead and really add the pressure on, some type of real substantive change and perhaps reparations to address the discrimination of the past. And my concern, though, is that programs like what you're talking about that involve private money, it's still being facilitated by federal banks. And so those who would be opposed to this might say that, well, you may use your own money any way you want to, but you can't use it with the support that you're receiving from the federal government. And so therefore, it's a in way around stopping any type of race-based support in housing.
Well, I mean, to just speak directly to that, every single regulator in the financial sector signed a shared statement around SPCPs. And that shared statement says, we fully support, we encourage these programs, we recognize them, and we are going to uphold them, and we will not find them at fault when they're done properly. So, I do think we have a political environment and a regulatory environment that's different from any other time. And like I said, folks finally listened, and but we're here today, and we'll see what the challenges are. I guess I'm glad that Lisa Rice and NAFA and Roman Colfax and others are where they are, because if those folks come and try and fight the good work that we and others are doing together, we're going to fight back.
Well, I hope you do, and I hope you win. Those are some powerhouse organizations that you have behind you, and so they have the ability to fight and to hopefully win. The Fair Housing Act, though, is significant legislation, and as you know, between '68 and now, 54 years have gone by, and we haven't seen the increase in the rate of home ownership. Programs like you're talking about that will provide down payment assistance for people of color is going to make a difference, because the number one barrier still is down payment. What help do you need, Gabe, to get banks to adopt what you're doing and to support it financially, because you're looking for the bank's private funds, not federal funds, to support this initiative?
Right, and it's not just banks too. I would say we are asking banks, mortgage companies, realtors, anyone interested in the industry. I mean, look at realtor.com with their current grant and challenge match. They're asking corporate partners of realtor.com and the Move Corporation and the News Corporation that owns them. So we're even we've got a fundraising consultant who even has the MBA on our fundraising list. So our intention is to ask everyone. We literally need to raise $50 million on an annual basis to help 5,000 homeowners. And so with this kind of program, it's not alone, in the way that we're not making money from it. We're not revolving the money. There's no fees, no interest. We are really conveying equity to people after 5 years of successful homeownership. And it's the closest thing to reparation that I can think of, Eric. So, and it's what we can do. And so what people can do to help that initiative, go to our website, homeownershipcouncil.org/equity-DPA. You'll see on there you can be an individual donor. Right now through June 30th, any donation is being matched by realtor.com up to $100,000. Otherwise, you can click on the interest form, and we will follow up for a corporate or a major donor, which would be like a bank or corporation. What we do with these funds, we permanently restrict them. We make sure that no less than 90% of funds go directly into communities that they're serving. And we partner with lenders and HUD-approved organizations to deliver it really efficiently.
So Gabe, through your leadership, you're actually creating a down payment assistance program that banks could actually utilize themselves. They could be their own program, funded by their own resources, to really have an impact in the communities where they have branches. And this would help them in meeting their CRA requirements.
Absolutely. Well, and their fair housing requirements, because generally banks have a struggle in making enough loans to all of the population within their service areas. And so, having an SPCP, down payment assistance, in combination with a standard first, gives you that extra boost to really make the difference in those communities.
So Gabe, I want you to make this kind of practical for me, because in addition to being the host of the Powers Now Media, I'm also a vice president and mortgage advisor with First Bank. My license number is 461807. The views and opinions that I express are my own. They do not necessarily represent that of First Bank, but I want to try to bring this home here. So if First Bank, or any bank for that matter, wanted to create their own down payment assistance program, because many banks work with like the Golden State Finance Authority, the California Housing Finance Authority, or throughout the country, there are state organizations that have, economic divisions, and they're providing down payment assistance in some degree. But if a bank wanted to have their own, what's the practical, steps to making that happen?
So, a bank is specifically allowed as a depository institution subject to CRA to create, make, and fund their own down payment assistance programs. If the bank does not have the infrastructure, the desire, or the ability to manage that particular product, or if in the case like an SPCP, they may perceive some sort of perceptual risk involved with it, then involving a nonprofit or a CDFI in the equation makes great sense. So what we do through Equity DPA is we're the qualifying nonprofit. We're a national organization. We can accept funds in any state, and we can deploy them in any state. And so we take in restricted contributions. We permanently restrict that contribution for this use. It has all of the mechanisms, the credit policy, and the fees included in that agreement. And when you are a participating lender in the program, actually thanks to inspirational chats with you, as I've known you for quite some time, and I appreciate your really firsthand knowledge of the best ways to originate loans, we are setting that up as a correspondent program. So all of our lender partners will be corresponding to, and they'll be therefore able to drive the entire transaction, meet all of our credit policy criteria, and that way there will be no delay in closing or nothing that's outside of their control. But it will still be our program, and everything else adheres. We're just going to be leaning on our lender partners to actually originate and facilitate, deliver that.
Now, this down payment assistance can work with any type of first, FHA, VA, USDA, conventional Fannie or Freddie?
Yes, the FHA requirements do require that your second lien have government sourcing. So we don't have that with this particular product. So everything you said, except for the Govy loans, we generally intend this to be with a conventional mortgage. It's very much designed to be 3% plus a 97% conventional, gets you 100% financing, and the consumer then only has to pay their closing costs. We require no out-of-pocket contribution, and this is a qualifying community second with the GSEs, so it qualifies as the borrower's down payment.
Gabe, this is really exciting information, and I love the idea that banks who are always looking on how they are looking at how they appear in their marketplace. Branding is everything. What a great way for a bank to really show their commitment to the community by having their own branded down payment assistance program. And then, even though it would be great, FHA could be a part of this because of the additional, flexibility involved in FHA. Fannie and Freddie guidelines they've come a long way in mirroring a lot of the requirements that FHA has. And of course, it's 3% down, and you have the counselable mortgage insurance, which FHA does not have. And so it's still a great program for a bank to adopt and have. So my question is, how does a bank get started? Is there a long application process? Do you want to, audit them, make them jump through a whole bunch of
Oh,
loops?
no. No. I mean, it really is quite easy to set up down payment assistance programs. We do this all over the country with a wide range of partners. And we use our Climb program, or STEP, which is like a mini Climb, to set up a product profile and details. And it's much easier than you might think. The biggest obstacle, Eric, is the capital. So it's setting aside the money and saying, how much money can you set aside? And then how many units can we get for that, with that source of capital? How many households can we help with that down payment assistance that can be set aside?
So do you have a minimum? So if you sign up for the program, you have to do a minimum of, 100 or 1,000 loans, or make a minimum volume, meet a minimum volume requirement in order to participate?
No, we don't. And we're really focused on the product, the credit policy, and the people that it's helping. We're not here to make any obstacles otherwise. And we certainly don't want to act like a government program. This is intentionally through a private nonprofit with private sources. And so we don't have to jump through the same hoops as a government funded program does. And that keeps it far more efficient for all of the players and easier for consumers.
Now, what about the maximum loan amount? I mean, is it going to be limited to conforming? Will you be able to provide down payment assistance on high balance, which is up to $970,000 now?
So our limits on our equity DPA program go up to 140% of the median income for BIPOC consumers. So that is quite a high number, especially in high cost markets. The loan amount itself, though, is limited because we're working with donor funds. And so we have a maximum loan amount of $9,000 for the equity DPA. In much of the country, not in these high cost markets you're referencing, that $9,000 will cover 3% of the purchase price. But in a high cost market, of course, it may not. Maybe it's used for closing costs in that scenario.
I see. So, but you're not limited. There's no limitation on how much the first can be. It can be conforming or high balance conforming.
That's correct. Yes,
wow.
Absolutely. Yeah.
Wow, that is fantastic. Because many programs are limited to just the conforming limit. I know that there's some that will go to high balance. Gabe, this is really exciting news, especially that it's targeted to BIPOC, Black, Indigenous, people of color. And I think that it's time that we, come up with programs that really, address where people are. And we know who those people are. The rate of homeownership for African Americans is in the low 40s. And it has been that way since we started counting practically. And definitely prior to the Fair Housing Act, and even still through all the last 54 years, the rate has not moved really at all. So we do need the help. Now, you mentioned earlier that you believe that the Fair Housing Act is still needed. What does the Fair Housing Act mean to you personally? And have you been a victim of discrimination in housing?
I've not been a victim of discrimination in housing. As a gay man, I've been a victim of discrimination. So I've gotten a little taste of what that looks like. Certainly when I'm a consumer in housing, with my knowledge and background, I'm a ferocious one. And I won't be stopped as a consumer. But I seek to empower everyone to do that, because there's nothing about me that others couldn't replicate and do themselves, right? And so, but what it means to me is, I've run organizations and programs that have served underserved communities for 20 years now. And I have seen time and time again, and it still happens today. This is not an old thing. This is something that is a consistent theme throughout that entire period. Cases where, let me give you an example. A borrower of color was automatically provided with an FHA loan, which was expensive. It had the mortgage insurance, it had increased rates, right? And that meant that their debt to income was too high for approval. Now, they came into the organization And we said, well, wait a minute, you've got, you know, a 690 FICO, your great income, you've got everything stable and looking, why are you in an FHA loan? You don't need that. Let's quote you on a conventional loan. This was at an organization where we originated mortgages for folks. And you know, we priced them out on a conventional loan, and their debt to income ratio is in line, and now they're approved. So, you know, right there, that was a discriminatory action in not providing the consumer your best price and your best options, and in automatically steering the consumer to a particular product. And we've seen that time and time again for communities of color or folks that have an accent. And I swear you can test it today, and you will find that it happens out there. So that's in lending and loan access. All kinds of things happen in real estate that you know, I've seen, you know, redlining, whether it was a thing in an area or it's still practiced in some quiet way. There is bias, there is racism, and there are decisions. There are, you know, people are shown things or not shown things, and there are no good reasons for that, right? So that still happens today. And I've seen directly appraisal bias, and where appraisals have come in low for no reason, because they were close to an area or associated with something, right? Or maybe it's just a Black household, and the appraiser noticed the pictures of Black, you know, family members in the house, and therefore reduced it. And you've seen some national news stories on that. This stuff all happens on a daily basis still today, and it's because the law does not change human behavior, and human behavior takes time. And the other thing is, we don't have enough Black representatives like yourself on the front line as a loan officer, as an appraiser, as an underwriter, and as a realtor. And we need more professionals in the field of color.
Gabe, you have said a lot here, and I totally agree with you. The new frontier of racism now is in coding and programming. And really, it started perhaps with the GSEs with loan level price adjustments. Just seemed to be finding a way to making it difficult for people of color to get into a home. And as FHA, you know, being a game changer when it started, because it provided long-term financing, you know, now, you know, after years, myself, 40 years in banking, you know, it seems almost like it's somewhat sinister to see that we are steering people into FHA product because we don't think we can get a DU on a conventional product, or we don't want to make the exceptions, or maybe they're not being allowed exceptions of higher ratios on conventional product. And as a result of that, they're paying much more than they should be paying. 1.75% upfront mortgage insurance, in addition to 0.85% per year in mortgage insurance, which I think from 2013 is not forgivable. It hasn't been forgivable since 2013, and it's been passed in the House several times, or at least one time in the House, to go to the Senate to restore the forgivability of the mortgage insurance premium, but it continues to just stay dead in the Senate. I don't know what we can do to change the hearts and minds of both our elected politicians and those who are service providers in appraisal, lending, originating, all of the different aspects of doing a loan. What can we do to change the hearts and minds? Because the law is not doing it.
Yeah, I do think you know, groups like NAMBA and the Mortgage Bankers Association are really making strides among professionals, and diversity initiatives in this industry are incredibly important. I always say to lenders when we're providing technical assistance that if you want to serve a population, make sure your representatives and your staff are from that population. It's really easy that way. And if you diversify your staff, you'll diversify your production. And you know, and you'll also see that these biases disappear because they don't have room in a diverse staff.
No, you're absolutely right. And it's interesting, you know, I was speaking to Ed Delgado, and he brought up the whole article about 98% of appraisers are white. 98%. So no wonder there's bias. I've been a banker for 40 years. I worked for nothing but big major banks with branches all over the place and employees all over the country. And I've always just been one or a member of a handful of African Americans. There is no diversity in mortgage banking, and it needs to change.
Yep, yep. Well, we need to get you in front of lots of young folks of color that are graduating college and want a great job and want to be successful like Eric is. And we need to get you on a tour because you couldn't be a real, and I'm dead serious, you can be an inspiration, I think, to the next generation. And you've clearly been successful and done a great job.
Well, thank you for that. And, you know, I turned 60 in a few days here. So my time as a banker is coming to an end. But I really would love the opportunity to speak. In fact, that's why the Powers Now exists, to provide information to consumers, to be a resource for down payment assistance and loan programs, to connect them with extraordinary real estate professionals who want to work with buyers, because, you know, every real estate agent wants to be a listing agent. So it's important that those who are in the business are putting themselves out there to be, you know, a source of inspiration or an example or just a resource for them to look into, get into this industry. You know, I'm in the banking industry actually by accident. I was planning to be a doctor and got, you know, fell in love, dropped out of school, got married, and went into business and banking. So that's my story.
You and me both on that, Eric. You know, where I was pre-med as well. And,
Were you really?
I literally had a calling to housing, and I changed direction because I was supposed to be doing what I'm doing.
Well, you know, I have no regrets, no regrets. And I love what I do. I'm very passionate about helping people become homeowners. You know, we spoke about real estate agents and, you know, not doing the right thing. And it was in the national news, Newsday, what was going on in New Jersey, agents steering people and to particular neighborhoods or just flat out not working with them. Since then, and you know, go back even to the 68 Fair Housing Act, do we see a difference with real estate professionals today? Is discrimination still a problem? It appears to be.
Yes, I mean, I still see things happen when I'm out in the field in different places. I could use Memphis as an example. I could use Louisville as an example, where we literally can walk from one street to another, see where redlining, where it was on the map, where it's still affecting things today. I have witnessed and experienced perception and sort of realtor behavior when they find out, for instance, in one of those towns that we were working on a program that was specific to an area, and that area was majority Black. And all of a sudden it was dead air on the interest of working on an event together. So yeah, I think, you know, discrimination and bias, I see it all the time, especially working in the mission side of the equation. And that's why I do the work I do. It's why I'm called to it. And I'm here to do everything I can to counter that.
We spoke about changing the hearts and minds. Laws don't do that. Laws don't do that. I really believe that one way we can change the hearts and minds of real estate professionals and lenders is for them to get to know, you know, people outside of their race, to actually create opportunities within organizations for people to come together and to truly work together on projects, to do recreational activities together, to really get to know people outside of their race or religion or orientation, and realize that they're just human beings with families and goals that you have, that they are not inferior, that they don't smell, they don't have inordinate tastes, they're not weird, they're worthy of your relationship, of your communication, your fellowship. And I'm just wondering, what strategies can organizations put into place that will change the hearts and mind, because the law is not doing it. And I'm saying this because for sale by owners, it's becoming, with the advent of the internet, everybody thinks they can, DIY is at the highest level it's ever been, right? Everybody thinks they can do everything themselves. No need of hiring a professional. And that's not my story. If my plumbing goes out, you better believe I'm not getting under the sink. I'm going to hire a professional. But there are many people who think they can sell their home, and many are doing that. And I'm wondering, are for sale by owners at a higher risk of violating the law because they have no license, they have received no training whatsoever in real estate practice, they do not know the law, and innocently enough, they could discriminate or do something illegal and really harm someone from being able to buy a home. And then there's some cases where they are just open and notorious about it because they are racist and are not going to allow their home to be purchased by a person outside of their race. Do you think that for sale by owners are at risk of violating the law?
Well, yes. I mean, I think you answered your question about all the risks as to why. And, people continue to make biased decisions even when they think they're not being racist. It still may be biased. And beyond the decision point of who you sell to and how you do that, there's a variety of disclosure laws in real estate that I'm sure consumers would not know on their own. And those are all pitfalls that could be a major, damaging suit against that seller if they don't do it properly. That's why you hire a realtor. If you can't pay the full fee, try and find one that's less expensive, but always have a professional.
Gabe, thank you so much for your time today. Please at this time, share your final thoughts about fair housing, and then also provide information for anyone that would like to reach out to you about getting involved in your down payment assistance program.
Well, thank you so much for having me, Eric. It's always great to talk to you and see you. And I've always thought very highly of you over all the years. I would say if you're interested in more information about Homeownership Council of America, visit us at homeownershipcouncil.org. You can find out more information about Equity DPA, as well as our CLIMB program, how we provide technical assistance to lenders and partners out there. And my message would be that we all need to be doing everything we possibly can, especially in communities of color, to convert strong mortgage-ready consumers into homeowners so that they can begin building wealth for themselves and intergenerationally. So that's what's going to make the difference.
Gabe Del Rio, thank you so much for joining us today. Have an awesome day.
Thank you, Eric. You too.
Thank you, Gabe, again for joining us today on our series, the 1968 Fair Housing Series, and for the great work you're doing in the community. I want to encourage all of you to reach out to Gabe if you're interested in having your own down payment assistance program. Those of you who are involved in banking or mortgage banking, what a great idea, right? To serve the communities in which you have branches or operations, and to support the BIPOC community, Black, Indigenous, people of color. As we all know, that racism and discrimination has created the gap that exists today for home ownership. I really believe that anyone selling their home should be required to get the education they need first. It should be monitored and mandated by the state to get the education you need on real estate practice, on real estate law, and on fair housing, so that you don't unintentionally violate the law. I believe this, and we're going to be, talking to our local representatives about making this a reality. And we certainly hope you agree as well. Now, I would love to get your feedback. If you think it's a bad idea, please share it with me. Drop me an email at eric.frazier@thepowerisnow.com. Again, thank you for watching. We got more to come. You're listening to The Power Is Now TV, the 1968 Fair Housing Series. This is our second season, and it's been going fantastic. And I certainly hope that you're watching and sharing it with your family and friends and others. Remember, we are at our best and we maximize our success when we act now. The power is now. Thank you for watching.